Everyone, welcome back to the TraderLion channel. This is Richard and Ross, and today we're continuing on with our Chart of the Week series, where we'll be going over one of the charts from the top 10 report that Ross publishes twice a week. If you're curious about that, the details are in the description. So today we'll be talking about Qualcomm, ticker symbol QCOM, and walking through the price and volume characteristics, the setup that we're watching into next week, as well as the fundamentals in MarketSmith. So with that, Ross, I'll hand it over to you just to talk about the overall chart and kind of what you're watching in terms of the setup.
All right, sounds good, Richard. So for starters, let's start with the larger picture. Even with the market, showing us some weakness the week before last, even though it's recovered, semiconductor chips as a group, the chip makers and equipment manufacturers have been showing some serious relative strength. They've clearly been holding up. If you look at SMH, which is the ETF for the SOX index, you can see it there. Some, like the NVIDIAs of the world, are really sticking up in the air. So Qualcomm has both that. It's got the semiconductor thing going for it, but also I think we've noticed a lot of money moving into some of these much larger cap names in general as well. So they also seem to be a place to hide, right? The Apples, Googles, and whatever, Microsoft, you name it. So Qualcomm definitely fits that bill as well. So from there, let's go, for starters, I'm assuming, because I don't have it up here, this is an earnings related gap here. Yeah. So, and we can see that volume is clearly letting you know that earnings is a catalyst. It probably caught a lot of people off guard. So, there's your big institutions not doing a very good job of hiding their, buying their demand, or they're excited, how excited they are about the stock. And so we want to, like anything else, we want to see that continue. For me, you can see it winds up being a viable gap up. In general, I will leave it alone on this day and then watch. I will find my way in, and as we know, it doesn't always do this, and that saves you in case it does a little dip back below. But anyway, so we've got the clear volume here. So now we're watching for a way to get into the stock. I would say if you really wanted in on an intraday basis, you could have worked your way in through the high here with really tight stops. But obviously, on that second day up, when you're thinking about doing that, the 10 days not so close, you usually don't have a great place for a sell stop. But anyway, you can see it finally gets a little bit of resistance here at that prior high, as we can see back here. We get this shakeout here, which I guess looks a little scary, but volume declines considerably relative to the prior few days. And now you can see volume comes in like crazy. So it didn't take long for a couple of the big guys out there to decide that this was still a good level to scoop up some stock, right? So now this was your, I'm going to say your best place. So I live by the saying, the best price is not always the lowest price, right? Especially if you wind up, doesn't matter how right you are, if you get shaken out and beat up financially and mentally before you get started. So you could have worked your way in here based on that price volume action and its prior high and still managed risk significantly better than you could have if you bought it on these first 2 days. So like I'm always saying, before you buy a stock, risk should be the first thing on your mind. Where's your sell stops and why? It's got to be tight and logical, right? So really since then, there hasn't been a place to add. Maybe here, very short term, you could have added a little bit, but ultimately Qualcomm's just been holding up and consolidating. And as we can see, it's barely touched its 21-day moving average. Spent maybe a few days below its 10-day moving average. And as we know, the indexes back here during this time were the S&P and NASDAQ were struggling below their 50-day moving averages. So, all of that was letting us know how strong this stock still is, the group still is. So, and I would say this, for those of us who may have missed it earlier back in here, this thing's just getting going. It's gapping up, showing massive strength out of a nice long base. And so I think it's worth watching here for even if you don't have a position yet, you can initiate one here with very manageable risk. And it's a great spot to add as well if you caught it earlier. So that is anyway, so I've blabbed on and on and on. I'd love to hear what you think. And I don't even think I know we haven't taken a look at the fundamentals yet, which you'll go through. So.
Yeah, sure. I don't have too much more to add. I think you're spot on. The relative strength in the overall group, SMH, is clear. And I actually tried this one on the Thursday where we had that push up from the inside day. It got slapped down. I got stopped out, I think, for a 1% gain. You can see that bar here. But now it's reset. It's held up pretty well. And the setup is still 100% valid. So we'll have to see whether we get that push through on volume. I think we'll have to see also how the market holds up as well. If we keep rallying off the 21 EMA and hold that level, I think these will ultimately work. But if we do undercut those lows, a lot of these setups will be void at that point. So with that said, let's go on over to MarketSmith and run through those fundamentals quickly because this definitely is impressive. It's showing a lot of earnings growth and sales growth in the recent quarters. So overall, looking at the last earnings report, the quarterly earnings report, earnings up 76%, sales supporting that as well, up 12%. And those margins are super impressive, up 31.2%. And yeah, if you can bring up the fund ownership, yeah, right there, you can see really nice steady growth here and two high quality funds, Fidelity and JP Morgan in this name. Looking at the annual estimates, we're seeing nice fall through in 2022 and a little bit more of an increase in 2023, although it's only up 6%. I'd love to see that become even more dramatic, get up in that 15%, 20% level. I think that would mean analysts are pretty optimistic and funds have a very positive view about the future of this stock. But overall, you've got that DTL drawn here, still set up on that pivot that we talked about in stock charts. And I think the clear thing here is that this group, the overall group, is ranked 1 out of 197. So we always say you got to have the group behind you. That just adds to the probability of a stock being a big winner. So definitely one to watch as it tries to break out of this flag after its earnings run. So with that, any last thoughts on Qualcomm and the overall setup, Ross? Anything you're watching?
Oh, that's it. You've pretty well covered everything else there is to say. Now it's just a matter of what happens next. So watch that price volume and the rest of the group. That's it.
Absolutely. And I think this is one of the ones that's kind of the main 5G play, the 5G play, if I'm not mistaken. Am I right on that, Ross?
I do believe, yes. And I mean, I think we all know for the most part, Qualcomm is connected to the cell phone industry, right? So they made, their chipset for cell phones way back when was, so not surprising now.
Perfect. Well, with that said, thanks so much for watching. If you enjoyed, go ahead and leave a like down below. Let me know your thoughts on the Qualcomm setup and any other names that you're watching into next week down below in the comment section. And we'll see you guys in future videos. Thanks.